Keir Starmer has staked his premiership on us feeling better off in 2026.
With the unfolding conflict in Iran and the Middle East, it is incumbent on me and on this government to secure our economy against shocks.
But a stretch of water just 35 miles wide on the other side of the world could make that promise hard to keep. So the Strait of Hormuz is a narrow but absolutely critical shipping lane in the Gulf, which is crucial for oil and gas supply to the rest of the world. About 20% of the world's oil supplies pass through there. And the conflict in the Middle East has effectively shut down this shipping lane. It's not officially been closed, but ships and tankers haven't been able to pass through there under threat from Iran that they'll be attacked. By effectively making this a no-go area for shipping containers, Iran has effectively weaponised the supply of oil and gas to the rest of the world. Reduced supply, along with delays, diversions and higher insurance costs, will push up global prices for oil and gas. While the UK isn't completely reliant on oil and gas from the Gulf, this is a global market, so any form of large-scale disruption does push up prices across the globe. One of the biggest importers of oil from the Middle East is China, and if it can't get its supplies through, it will start looking elsewhere on the global market to get that oil, and that will mean more competition for less supply, pushing up prices for everyone else. Higher energy and oil costs are a key driver for increasing inflation. Inflation in the UK has been on a downward trend over the past year, but if disruption in the Middle East and higher oil prices are sustained, we could well see that go into reverse in the UK. When inflation is high, interest rates tend to stay the same or even increase. The Bank of England was expected to lower interest rates at the end of this month, but bets are off now on that. So what will this mean for mortgage rates? Anyone renewing their fixed deal this year might well be in for a shock. And experts are advising that you lock in a new rate now before they potentially rise any further. What this means for energy prices for consumers depends on how long the conflict continues. Some analysts have predicted that if it goes on for 6 weeks or more, this could push the energy price cap in the UK to £2,500. In the US, where there are midterms due in November, Donald Trump will want to keep voters happy.
Well, thank you very much. These are exciting times.
And higher energy bills is not a way to do that.
The prices for American communities will not go up, but in many cases will actually come down and very substantially.
So Trump will want to avoid any escalation that keeps prices inflated for a long period of time. And he has been known to be dictated by financial markets before. Last year, he de-escalated his tariff trade war after markets did not respond well.
One big, beautiful bill. I'd like to name it that if you can.
Iran will also have an interest in making sure supply through the strait resumes. It is a massive exporter of oil, and any prolonged closure or disruption will be incredibly damaging to its own economy. So it could be a case of who blinks first.